Ladies and gentlemen, good day and welcome to Torrent Power Limited Q1 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Mashruwala, CFO, Torrent Power. Thank you, and over to you, sir.
Thank you so much. Good evening to all of you, and thank you for joining Torrent Power's earnings call for Q1 FY25. First, I will take you through the performance of the quarter, after which phone lines will be open for the Q&A session. Let's explain the performance of the company at PBT level first, and then we'll take you to the tax expenses separately. Reported PBT for the quarter stood at 1,315 crores as compared to 711 crores in the corresponding quarter last year, an increase of 603 crores, that is a growth of 85% on a reported basis. PBT for the current quarter includes non-recurring credit of 102 crores for carrying costs approved by the regulators. Adjusted for the above non-recurring item, the adjusted PBT for the quarter stood at 1,213 crores as compared to 711 crores in comparable quarter of last year, which is higher by 502 crores, with a growth of about 71%. Business-wise factors contributing to the performance are as follows. First, gain from sale of merchant power and LNG of 517 crores. During the quarter under consideration, merchant capacity were operated for sale in the merchant market for 77 MW NVVN tenders, Section 11, as well as sale of power in the merchant and power auction as well. Currently, demand and supply situation in the electricity market is favorable for generator like us, who has an untied capacity, and due to the no major investment being made on thermal capacity in the recent past. With moderation in LNG price globally, it provides a good opportunity for us to run our untied up capacity and gas-based capacity of 1,500 MW. Overall, PLF for thermal generation improved from 40% to 60% due to better long-term as well as merchant sales. Our mentioned gain from the thermal segment were partially offset by two reasons. First, reduction in contribution of the renewable energy segment by 4 crores. The second, reduction in contribution from the distribution business mainly on account of two reasons: a marginal higher T&D losses across all areas except Agra, offset by better demand across both the segments, which increased by 7% in the distribution area and 6% in central distribution area. This completes the explanation on financial performance during the quarter. Moving on, we'll now give the brief update on the project under pipeline. 3 GW capacity of renewable power projects are in pipeline, which includes following projects. First, 87.7 MW out of total 420 MW solar project having PPA with our own DISCOM has been commissioned during the quarter. The rest capacity is expected to be progressively commissioned by end of Q2 FY25. As informed earlier, project is expected to have improved return profile considering reduction in solar module prices in international market. Project cost is expected to be around 1,800 crores. Second, 300 MW SECI 12 project, wind project, PPA for which was executed in the end of May 23. A turnkey EPC contract for the development of the project has been awarded to Suzlon. In view of the procedural delay in adoption of tariff by ERC, the SCOD of the project has been extended to January 26. The project cost is expected to be about 2,500 crores. Third, 200 MW merchant hybrid project comprising of 125 MW wind as well as 75 MW solar is being developed under the air power wind farm. The project implementation is on track and plant is expected to be commissioned progressively by December 25. As the power from the project will be sold directly in the merchant market, it will start generating revenues right from the first part of commissioning as the evacuation infrastructure is in place. The project cost is expected to be 1,400 crores. Fourth, a 25 megawatt hybrid project having PPA capacity of 450 megawatt. We have owned DISCOM comprising of 486 megawatt wind and 339 megawatt of solar project was awarded through bidding process at a fixed tariff of ₹65 for 25 years. LOA for the project has been awarded and PPA for the project is likely to be executed by end of Q2 of FY25. SCOD of the project is 24 months from the PPA date and likely to be implemented with a project cost of 5,500 crores. Fifth, 368 megawatt hybrid project comprising of 225 megawatt of wind and 144 megawatt of solar project was awarded through a bidding process conducted by the Indian Railways at a fixed tariff of ₹4.25 per unit for 25 years. LOA for the project has been awarded and PPA for the project is likely to be executed in the current quarter. SCOD of the project is 24 months from the PPA date and likely to be implemented with the project cost of 2,600 crores. 6. 425 megawatt solar project having PPA capacity of 306 megawatt was awarded the bidding process conducted by the MSEDCL at a fixed tariff of ₹10 for 25 years. LOA for the project has been awarded and PPA for the project has been executed. SCOD of the project is September 25 and is likely to be implemented with the project cost of 1,550 crores. 7. 100 megawatt wind power project awarded through competitive bidding process conducted by the SECI at a fixed tariff of ₹3.60 for 25 years. PPA for the project has been executed. SCOD of the project is June 26 and is likely to be implemented with the project cost of 925 crores. 8. Under C&I portfolio, company has 528 megawatt project under development comprising of 426 megawatt solar and 122 megawatt of wind project. Out of which 35 megawatt has been commissioned till end of the current quarter, taking total C&I capacity to 563 megawatt. Balance capacity is likely to be commissioned progressively within next 2 years. Project cost is expected to be 2,700 crores. Apart from renewable energy projects, the company is working on the development of 2 transmission projects as well, which includes first Khavda transmission project under Torrent Power Grid Limited. It's a JV between Torrent Power as well as PGCI, which has been awarded to the company on nomination basis under regulated tariff mechanism, post-tax return on equity of 15% plus incentive. The project cost is expected to be about 800 crores. Second, Solapur transmission project under new SPV, which was won on the competitive bidding basis, conducted in the Q1 of FY2025 at annual fixed cost of 50 crores per annum for 35 years. The project cost is expected to be 470 crores. The above said investment in renewable as transmission project, the company has investment plan close to about 20,000 crores for next 3 to 4 years. Moving on to the 2 new ventures, company's pilot project on green hydrogen blending the CNG is in UP. One of the largest private blending project in India is expected to be commissioned by Q2 of FY25. Further, the company has got allocation of 18 KTPA of green hydrogen production under SECI PLI standard. The average PL of 28.89 per kilo. Technical efficiency has been done and detailed business plan is under preparation. With respect to pumped storage hydro project, having identified project site with a potential of 8.4 gigawatt of pumped storage hydro capacity in the state of Maharashtra and Uttar Pradesh, entailing total investment of 40,000 crores. 3 feasibility study completed and MOA terms of reference has been granted for the entire capacity of 8.4 gigawatt. Agency appointed for EIS study and environmental clearance for all sites. Similarly, the opposite are being explored in other states like Gujarat, MP and Rajasthan. We have initiated the process for obtaining requisite approval. This could be offered either as a storage solution or providing high cost US or RTC renewable power solution. That's all for the quarter. Now I request coordinator to open the Q&A session. We wish everybody to stay safe and healthy. Thank you. And we go to the operators.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you for a very strong performance. Just have a couple of questions. On the merchant power sale, I'm not sure if I missed it. Is it possible to share the split between NVVNL and Section 11? What was the volume sale? And also separately on the profitability for Section 11, last time we discussed that there is benchmark and then there is a spread over that benchmark. If you can maybe share some metrics around profitability under Section 11 that you had in this quarter.
Breakup we will not able to provide, but we can able to provide the MUs basically. MUs we have sold is about 1,700 MUs we have sold in the merchant market.
Oh, so but generally any kind.
It is including the NVVN sale, Section 11 as well as the sale on the exchange and bilateral basis.
So any profitability directionally can you give on maybe Section 11? What was the price at which you sold, or maybe some kind of profitability metrics under Section 11?
This kind of opportunity is available in the summertime and the pre-winter time. So summertime, since the demand is very strong and LNG prices are moderated basically. So we got this opportunity to sell significant quantity in the merchant market. You know, we have 1.5 gigawatt untapped capacity. So we have utilized this capacity in selling in these 4 areas, NVV and tenders, Section 11 on over exchange as well as on bilateral basis. So we got this opportunity during the summertime. We expect similar opportunity will be available during the pre-winter time also, maybe September, October, kind of things, depending on the seasons, how the seasons progress.
Okay. And can you remind us on your take or pay on LNG? What is the current contracted LNG volumes you have? And I believe you're looking at new tenders. So how does it? Maybe just some details on when these take or pay contracts run out and what kind of renewal you're looking at?
So we are working on the fresh contract, in fact. So it's under discussion right now. So it's work in progress kind of a thing.
Currently, you have, I believe, 3 LNG cargoes contracted under take or pay each year for the next 1 or 2 years. Up to 26, yes, 3 cargoes we have contracted. And balance cargo for the year we have purchased a spot basis. So now the LNG price is moderated, so we will try and contract more cargoes going forward. Maybe possibly more than 3 cargoes is what you suggested. Yeah.
Absolutely.
Just one more quick question on the distribution and transmission. Just want to understand very strong YOY growth, the underlying drivers. You discussed it briefly, but if we look at AT&C losses, have also distribution losses were generally slightly higher YOY. What drove that profitability in that business?
Sorry, come again.
In the distribution and transmission business, when we look at the underlying profit compared to last year, there is significant growth. Why? I just want to understand what were the drivers that led to that.
Demand has gone up by about 6-7% in the Q1 as compared to the last quarter, compared to what of last year. The profit is mainly coming from the approval which we have received from the regulator for the carrying cost of close to about 100 crores this quarter.
Okay, so that was the big swing in just the approval for that carrying cost?
Yes, exactly.
Thank you so much. Wish you all the best.
Thank you so much.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Participants who wish to ask a question, you press star and 1 on your touchtone telephone. Next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Hi, sir. Congratulations on a very good set of numbers. My first question is it possible to let us know the current arrangement of sales from DGen and SUGEN? Is it under Section 11, and what is the quantum available on the merchant basis? Just some color would be helpful, yeah.
So SUGEN, if you look at the Section 11 provision, so whatever is untied up capacity, for example, we can able to offer to under Section 11. But since we have a NVVL tender, we have some committed capacity from SUGEN and DGen. So balance capacity we can offer on Section 11.
So what is the quantum and how long it will continue, this Section 11?
It will be up to 30th June, I would say. So it's a limited period of time till the summer month.
So this is over, right?
Yeah, yes.
So now the entire capacity is free to be sold in the merchant, right?
Yes, exactly.
So Mohit, just to add, typically what happens is that if you have untied capacity, when you say untied capacity, it includes your long-term contract and it includes your bilateral contracts also. Over and above that, if you have any untied capacity, then you have to sell it in under Section 11. So typically what we do is we also do bilateral contracts of short term for 1 month, 2 months, 3 months. Those capacities are not available for Section 11.
And generally Section 11 capacity government is asking, we give the schedules during the peak time. We provide the schedule, and as per the schedule requirement, we have to supply the power under Section 11. It will not be throughout consistently being provided. Government is providing the schedule when they need the power, and accordingly we have to supply power to under Section 11.
Is it right to say that the Section 11 is over now and most of the capacity is free, right?
Yeah, it is up to the scheme was available up to 30th June. So now it is not no longer Section 11 is applicable at this moment.
Second question is on these T&D losses. Of course, generally we see improvement every year. This particular quarter, we have seen the increase in T&D losses. Is there a particular reason which affected our AT&C losses?
See, if you look at the Ahmedabad and Surat distribution area, there is a growth about 6-7%. So, and there will be more retail selling to more retail residential area, I would say, where the losses is a bit higher as compared with the industrial as well as commercial consumer. So sale to those residential consumer are higher, and where the losses are higher, I would say. That is why it has been gone up by for a few basis points.
My last question on the other expenses, that has gone up, I think, 60 crore QOQ and YOY by 100 crore. What explains this?
If you can repeat your question.
Other expenses. If you look at the expense line item, it has gone up by other expenses.
Other expenses, see, the plant operation is higher. We have, if you look at generation PL about 40%, it is gone up to 60%. So obviously my plant O&M expenses will be higher. So because of the plant higher operation, my other expenses is also higher, which is being booked in the other expenses.
Understood, sir. Thank you, Mr. Sir. Thank you.
Thank you.
Thank you. Before we move to the next question, a reminder to the participants to ask a question, you may press star and 1. Next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Good evening, sir. Thank you for taking my question and congratulations on good set of numbers. So my first question is on the gain on sale of gas on merchant basis as well as NVVN. So you said in the opening remarks that it is incrementally it is higher by 917 crore, right?
Sorry?
It is incrementally higher by 917 crore year on year?
517 crore.
517 crore. Sorry, my bad. So, sir, last year, same period, I think the gain was almost 140 or right, sir? Incremental? I think there's 130 crore gain from merchant and 10 crore from LNG.
Yes, 140, about 145 crore was the gain for the last year.
Okay, so this year it is like, sir, this is
the incremental profit of 517 crore we are talking about.
Incremental, yes, I got that. Okay. And sir, this carrying cost, which has got approved by the regulator, is for the distribution you said, right? Which is still, this
license distribution area.
DL, license distribution. Okay. Ahmedabad and Surat, right, sir?
Yes.
And sir, one more question on the bookkeeping side. We have seen a sharp increase in the employee cost. So what was the reason for that, sir?
I don't think there is a sharp increase in the employee cost.
General, if you see in Q4 24, it was 147 crore. This is 173 crore in Q1. So obviously there is a sharp increase.
Comparing Q4, but rather I think quarter to quarter one has to compare.
Quarter one also it was 146 crores last year.
Generally the Q4, if you look at the Q4, my capitalization is highest in Q4.
Sorry, so, can you come back?
In Q4, our capitalization is highest in Q4.
Okay.
So because the highest capitalization, some of the costs of employees also get capitalized because of the accounting, the capitalization of expenses. So, and Q1 capitalization is lower, I would say.
But this is not the trend, so this is a different trend we saw. Okay. And sir, on the CapEx guidance, can you throw some light for this year?
Capital guidance is the same guidance. About 2,000 crore we plan to spend for license as a franchise distribution business. 1,750 crores is for earmark for license distribution business, and about 250 crores is earmark for the franchise distribution area.
And in the renewable part, sir?
So renewable progressively we have 18 to 20,000 crores investment plan for next 4 years, I would say. So every year we'll spend about 5,000, close to 5,000 crores. But it will be progressively spent based on the commissioning of the project.
Mm-hmm. And sir, on the opening remark, I think you said something on the green hydrogen and the PSS, which is not part of the presentation. Can you repeat, or I can take it separately after the call also? It is fine for me.
Yeah, you can take it separately after the call.
Okay. Okay, sir, that's it from my side. I'll come back in the queue. Thank you. Now,
thank you.
Thank you. Next question is from the line of Bharani from Avendus Spark. Please go ahead.
Good evening. Am I audible?
Yeah.
Yeah. So I just want to clarify the split of this Section 11 and the contracted capacity through either PPA or bilateral plant-wise. Like Sugen has about 80% contracted to own DISCOM. So should I consider the remaining was offered in Section 11 in the quarter?
So about 75% is tied up with the long-term PPA for Sugen as well as no Sugen. And yes, balance is available. Part of it is available for Section 11.
So Bharani, you are right. For long-term PPAs it is 75%. But as I told earlier, that we also do short-term contracts. Now, if you already have a short-term contract in place, that will not get counted under Section 11.
So that's what. So 25% of Sugen and Sugen, the whatever is remaining, that would be given to bilateral or merchant or Section 11. Sorry. So what would have been that bilateral portion from Sugen and Sugen in 1Q?
We are not sharing those numbers. I think we should look at merchant on a holistic basis rather than dissecting it into different sections.
Okay. So of the overall capacity of Sugen, Sugen and Sugen, which is 2,730 megawatts. How much would have been given to merchant in megawatts in 1Q?
So merchant total MUs which we have sold, which comprises Section 11, NVVN and bilaterals or on exchange, is around 1,700 MUs for the quarter.
Okay. That comes to what percentage? I mean, I can calculate, but just for discussion purposes.
Sorry, come again?
That will come to what percentage of overall sold by these three plants?
I'll give it to you offline. I don't have those numbers as of now.
Okay, got it. And pre-winter, like in September and October, again there would be probably increased sales in merchant or bilateral. But do you foresee Section 11 in those months?
It depends on the weather condition, I would say. So how the weather condition will be there, it depends on the weather condition. And though the weather will not be so severe like summer, so as of now it is too early to estimate whether Section 11 will come or not.
Okay, so for the remaining part of the year, we can assume that it would be PPA capacity plus some merchant sales that can happen from the untied capacity.
Yes.
Okay. And final question. So I think the last quarter's call, some number around average tariff and average cost of generation for NVVN was said. I think it was cost at 8 rupees per unit, tariff at 10 rupees per unit, so EBITDA contribution of 2 rupees per unit. So was this materially different or was it same for NVVN?
The contribution is higher in the summer months. We can't give the exact number of amount of contribution, but it's higher than the summer, during the summer month.
Okay, so and what would be like the average cost of generation at present or for the remaining say 9-month period for these gas-based power plants in rupees per unit?
If you it depends on your material cost, cargo cost basically. So average so far what we have acquired is about $9.5 per MMBTU. Fuel cost.
Okay. That will roughly translate to 7-8 rupees per unit landed cost?
Yes, then I think about 6.5 rupees kind of a thing, variable cost.
Oh, very good. Okay, thank you so much. I will come back in a bit.
Yeah.
Thank you. Next question is from the line of Vishal Periwal from Antique Stock Broking. Please go ahead.
Yes, sir. Thanks for the opportunity and congratulations on a good set of results. I joined the call a little late, so pardon if there is a repetition. In terms of our quarterly PAT of roughly 996 odd crores, can you share if one has to remove one-offs in this, what could be a recurring PAT for us?
So out of PAT of PBT of 1,315 crores of the Q1 of the current quarter, the one-off is hardly 102 crores, which is a carrying cost. We got approval of 102 crores carrying cost. That is the one-off items.
Okay. But sir, I think Section 11 again, probably if it is not continuing at least for the next coming quarter, will it be possible maybe to subtract that and to provide some numbers?
No, we treat as a Section 11 part of the merchant sale, so we don't distinguish the Section 11 differently. So all our NVVL tender, merchant sale on over exchange and bilateral basis and the Section 11, we all treat as a part of the merchant sale.
So Vishal, I think on a normalized basis, if you're talking, I think you'll have to see on a YOY basis rather than a quarter-on-quarter basis. So if you look at last year, or any year, Q1 has always been better compared to any other 3 quarters because of inherent demand in the country, which is very high, and that's why having higher merchant sales. So if you want to normalize, I think we'll have to look at Q2 versus Q2 rather than Q1, Q2, Q3.
Okay, so is that fair to say in the Q1 of last year there was Section 11 that time also?
No, Section 11 was the first time which was imposed on gas-based power plants in this Q1. What we are trying to say is that merchant sales on a holistic basis, there was profit in the last year Q1 also. There are profits in this year Q1 also, which typically goes down as we progress towards the year. In Q2, Q3 and Q4 typically it tapers down because of lower demand.
Okay, sure, sir. Maybe, sir, on this Section 11, any number that is there in public domain that you'd like to share in terms of the realization, how exactly it differs, maybe with our contracted quantity, if there's any directionally ballpark percentage higher, or if you can just share.
Yes, we explained, we don't differentiate the Section 11. It's a part of the merchant sale.
So as far as the formula is concerned, it is 120% of your variable cost. Now variable cost is defined as your gas price, which is defined by GSPL or the defined price by the GAIL price, against which our sourcing cost is lower. Another one is on the O&M costs, which are variable. There is some normative parameters against which our O&M costs are lower. So if you look at from a holistic basis, my margins would be higher than 20%, which is being given under Section 11.
Okay. Got it. Yeah, so that's all from my side, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Swati Junjunwala from JM Financial. Please go ahead.
Yeah, thanks for taking my question, and congratulations on a good set of numbers. Sir, I might have missed it. So the CNI capacity of 525 megawatts, when is that expected to be commissioned?
Next 2 to 3 years. 2 to 3 years.
Next 2 to 3 years. Okay. And so can you give me a broad sort of a number as to what you are planning to commission this year versus next year versus FY27? Is it like, are the 8 projects that you highlighted, is that it, or there might be more?
So as of now, 8 projects under development right now. If you look at by March 25, one project of 420 megawatt is getting commissioned.
Right.
Okay. And the rest of the project is getting commissioned from next year onwards. Some capacity will get commissioned in the CNI portfolio also.
Understood.
Air power capacities progressively get commissioned because it is though the commissioning deadline is somewhere around December 25, but some part of the capacity is getting commissioned before March 25 also.
Understood. And on the hydro PSP, so this 8.4 gigawatt, can we assume a sort of a 4 to 5 years timeline for this one to come up, since it's still in the approval phase?
Yes, at least 5 years, I would say.
Okay. And so just one question on this PSP. So are we looking at it at a, like, is it near a river or is it not near the water body? Because I think the water requirement is very different.
I think it is not run of the river projects. They are all pumped storage hydro projects, and those projects are typically in those areas where rainfalls are good. So once you have good rainfalls, you can collect the water and use it for.
So there will be a reservoir for upper as well as lower reservoir, and so in that area it will be developed.
Understood. So it's not run of the river, is what you're saying?
No.
Okay. Thank you so much, sir. Yeah.
Thank you. Next question is from the line of Aniket Mittal from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity. So one clarification, for the quarter, what were our LNG sales or the gains that we made on LNG?
LNG sales are very
minuscule. So now the opportunities to generate the power and sell in the merchant market. So very minuscule amount we sold in the LNG.
So this overall number of let's say 660 crores worth of gain that we made, almost 650 crores will be merchant related. Or is that fair?
Sorry, come again, Aniket?
So the overall profit, if I look at the overall gain on merchant plus LNG sales for this quarter is roughly 660 crores, right?
That's right. Yeah.
So out of this, about like you're saying 650 crores is just merchant related only. LNG sales would be 10 crores or lower. Is that fair?
40 crores is the LNG sales, the rest is the merchant.
40 crores, it's about 620. So on the 1700 MUs that we sold, we earned 620 crores EBITDA. Yes. Is that right?
Yes.
Okay. And sir, is Section 11 for us being more profitable than the actual let's say bilateral contract that we've done between the two?
So I think Aniket, it is very difficult to look at it in that fashion. As Saurabh rightly said earlier, Section 11 does not guarantee you RTC power. So if you want to participate in Section 11, you will have to have your base load running, and then you can participate in Section 11. So I think we'll have to see on a holistic basis wherein you enter into some short-term contract which will give you an RTC power and you can use your generators on a base load. And then once that is there, even though at a lower profitability, then that opportunity is available for you to ramp up faster and take utilization of Section 11 or peak power demand and what other opportunities are available in the market. So I think it's a combination of all of them which gives you better profitability.
Okay. Just one more bookkeeping question. What were the merchant volumes that we did in 1Q of last year and for FY24 as a whole?
So in terms of MUs, about close to 500 MUs last year.
For 1Q. Hello?
400 MUs. 400
MUs, so 1Q of last year?
Q1 of last year, comparable quarter of last year.
And for FY24 as a whole?
1400.
1400. And so what would have been the overall merchant gains for last year?
Merchant gain would be around 300 crores, 325 crores.
Got it. Those are my questions here. Thank you.
Thank you.
Thank you. Next question is from the line of Ishan Minda from IIFL Securities Limited. Please go ahead.
Thank you for the opportunity, sir. I just wanted to understand if there has been any development on the part of DISCOM privatization or parallel licensing.
So as of now, there is no further development because parallel licensing, we have replied all queries of the regulators. So we are awaiting the further action from the regulators. And privatization, now the election is over. So let's see, we have to watch the state government action going forward.
Sure.
But we are very keen to participate in any opportunity available in the privatization.
Sure, sir. And with Section 11 only up till 1Q of FY25, how has the performance of the gas IPPs been? If you could provide any qualitative comments.
So we don't know the other, but we have our gas-based power project is ready to meet any demand, I would say, either merchant market, Section 11, everything. So we are, in fact, it's a state of readiness condition for all our projects, including the Digen project also.
Sure, sir. But at current merchant rate, are we able to maintain a good level of margins on your merchant operations with rains?
If you look at the Q1, the significant profit we have won from the merchant market.
Yeah. Sure, sir. Thanks. That's from my end.
Thank you.
Thank you. Next question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Yeah. Hi, sir. So in the till July this year, almost around 6.5 gigawatt of renewable capacity has been awarded.
Sorry to interrupt, sir. Your voice is very low.
Audible? Hello?
Yes, please go ahead.
Yeah. So till July this year, almost 6.5 gigawatt of renewable capacity has been awarded, but we haven't won any any project as of yet. So are we planning, or is it a decision that we have taken to execute this portfolio first and then get back in the bidding process?
Last 6 6 months, I would say. Last Q1 as the last 6 months, we have won about more than 1.5 gigawatt of capacities in last 1.5. Yeah.
Okay. So, but we will be bidding in FY25 as well for new projects.
Absolutely.
Yeah, Nikhil, so aim is to have at least 5 gigawatts in next 2 or 3 years to reach 5 gigawatts. So we are right now under construction would be around 4 gigawatts. And so we'll keep on looking at projects. Only thing is we have to meet our parameters. If they are meeting, and we'll be wanting to take more projects.
Understood. And sir, we are also doing merchant RE projects. So will we be taking up more such projects? Or?
So as of now, one project is under construction. So we'll commission that one project and then we'll see. As of now, there is no further plan of merchant project.
Okay, and this will be purely based on sold on exchanges or through bilateral contracts as well?
So we'll see wherever base price is available, either through stock exchanges or through the bilateral basis, we will do it.
Something like a virtual PPA as well?
So it's dependent on the available opportunities for this kind of a project.
Sure, sir. Thank you and all the best.
Thank you. Next question is from the line of Amit Binde from Morgan Stanley. Please go ahead.
Hello, sir. Congratulations on the great set of numbers. I just wanted to get some update on the note number 3 that you had been recently putting out, where you quantify the revenue from the merchant and RLNG. So how much it is this year? Last year it was 72 crores.
No, revenues from merchant.
Merchant and RLNG that you had been putting in the notes of account recently. So this time you haven't put that, note number 3.
So it was not a very significant number. So that is what the auditors has dropped the note.
So that is only of the RLNG sale, you mean?
Yes, exactly.
Okay. So for merchant, I mean, would it have been around 1,700 crores this year? Oh, sorry, this quarter?
We say the 700 MUs is there.
Okay. 1,700 MUs is there. So I'm just assuming a price of around 10. Is that a correct number to guess?
You can assume that.
That is an approximate number. Right. One other clarification that I wanted to get is that RLNG and merchant gains this year is 517 crores increase or absolute? Because last year I think
incremental. It's the incremental.
And to the previous question you said it is 145 crores for Q1 F24.
Yes, exactly.
Sure. Okay. Those were my questions. Thanks.
Thank you so much.
Thank you. Next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. Just a couple of follow-ups. So wanted to understand on Section 11, whatever untied capacity you have the option to sell it in the power exchange, bilateral support by Grid India. Is that fair? You have the option as a generator to sell in any market segment where you find better prices.
No. I think if you, before imposition of Section 11, if you had already tied up your merchant capacities on a bilateral basis, that you can not offer under Section 11. All the other capacities you will have to offer under Section 11. If there is scheduling by the regulator or by the SLDC. If they are not scheduling, you are open to sell in the merchant market.
So under Section 11, it has to be based on scheduling by the SLDC. Is that what you said?
Yeah. So under Section 11, if it is scheduled, you will have to supply power. If it is not scheduled, you are open to sell in the merchant market or wherever you deem fit.
Okay. So just because I was trying to understand, if we look at the variable cost of 6.5 rupees, is what you mentioned based on the LNG price. There is obviously going to be incremental O&M also, and then you have, based on the number that you mentioned, it looks like an EBITDA spread of 4 rupees per unit. Overall, it looks like about 12 rupees per unit. So we're just trying to understand, when you sell this, these would be in high price DAM market. So when these are scheduled by SLDC, just wanted to understand the clearing mechanism for this.
No. So there is no, when you say clearing mechanism, can you just elaborate on what do you want on the clearing mechanism?
I was trying to understand the price is coming to about 12 rupees per unit. Where, how are you scheduling this power sale?
I'll tell you, the scheduling is not done by us. It is done by, let's say, under Section 11, the SLDCs would do the scheduling, right? Under bilateral, the other person who has entered into a contract will do the scheduling. Under NVVN tender, again NVVN will do the scheduling. So we don't have scheduling in our hands. Only thing which we have is that if the scheduling has not happened, and if there is an untied capacity, if we are able to sell in the merchant market, we will sell.
Okay. And one more question I wanted to ask on the LNG cargoes that you are looking to tie up. Can you maybe remind us the 3 cargoes that you had for take and pay? How much of your overall generation these 3 cargoes would account for, and the rationale for maybe tying up more cargoes is you seem more confident of using that in the merchant market on a longer term basis?
So I think if I look at my cargo requirement or my LNG procured, as of now, under my PPA obligations, I have procured around 50% of my PPA obligation. Balance 50% is open. So I think I would want to do that first in terms of my PPA obligations are concerned. Merchant, we keep on looking at opportunity on a year-on-year basis. We don't want to lock ourselves because these are all take-or-pay contracts. So if tomorrow merchant prices go down and you are not able to sell on the merchant market, you'll have to pay for that cargo. So that we don't want to do it on a longer-term basis. A year and a half, we keep on looking at it and then keep on procuring cargoes for the merchant market is concerned. And anyways, all these long-term contracts are all variable rate contracts. They are not fixed rate contracts. So you are just tying up the quantity rather than the pricing.
Volumes. That I understood, tying up the volumes. Just that obviously if the demand is not there, I was trying to understand these are take-or-pay contracts. But you're suggesting that anyway with the higher LNG cargoes, you would still need that for the PPA as well, right? So
that's right.
Okay. Thank you so much.
Thank you.
Thank you. Next follow-up question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, thank you for taking my question. So just harping on the LNG tie-up. So now, as you said, only 3 cargo tie-up is pending. So, which is, and this is for the 50% of the PPA capacity. In balance 50% we will be procuring from the domestic market.
So this 3 cargoes, I think it is factually wrong. What we said was 3 cargoes we have tied up for till December 26 as of now, right. And there are some contracts for domestic procurement. Both put together gives you a tie-up of 50% for my PPA capacities are concerned.
Okay. So basically 3 cargoes up to December and domestic contract put together is 50% up to December 26 broadly.
That's right. Balance 50% under my PPA obligations is open, and whatever I am anticipating to be sold in the merchant market, that is open.
So this tie-up is at around $9.5 MMBT, right, sir?
Yeah. No, so $9.5 are all the fixed contracts which we have done on a spot basis. The 50% cargo which I told about under the PPA are all variable rate contracts. Which are not fixed rate contracts, because under the PPA it has Section 62 PPA wherein the LNG cost is a pass-through.
Okay, so this cargo type also cost is a pass-through. It's an open contract based on the delivery.
Under the PPA it is a pass-through.
Pass-through. Yeah. Okay. So this is so basically on the date of delivery, that whatever cost would be there, it is a pass-through. What I understand, correct?
Yeah.
Okay. And sir, any further tie-up which you are targeting now, as you have put the tenders, as you said? So when can you expect these tenders to get awarded in terms of further tie-up beyond 26 or for the balance 50% open capacity open?
We are under discussion, so we keep that as soon as possible.
Okay, sir. Thank you, sir. Thank you.
Thank you. Next follow-up question is from the line of Bharani from Avendus Spark. Please go ahead.
Yeah. So are we bidding for any thermal projects which might be up for sale or on the NCLT?
So we are looking at it. So if good assets are available at reasonable price, yes, we are keen to acquire those assets and the thermal side.
Okay. So any target we have, like we will want to add so much in thermal in the next 2 to 3 years?
There is no such target. There is no such fixed target. So it depends on the quality of asset and the price also.
Understood. And coming to the recent developments where battery prices are coming down, there have been several bids with battery storage as a component, and have we been bidding there? If not, what is our thinking and strategy there?
So far not, but we are evaluating it. Our understanding is the battery and the pump storage will coexist in the market.
Correct. So if we are having a pipeline of 8.4 gigawatts on pump storage, like my question is, in battery, why aren't we taking advantage of the low price?
We are evaluating it, and we would look at it in an opportunity point in time. But right now we are also evaluating battery storage as a solution and bidding for that.
So actually, Rishi, my point is there any challenges specifically you are seeing in battery which is keeping you, still in the evaluation stage? Meaning, okay. My last question is on again our 1Q sales in the merchant. Now, if I did just a calculation on how much we actually generated from Sugen, Sugen and Degen based on the PLFs you have provided, it comes to about 3,300 million units. So you're telling we sold 1,700 in merchant. So roughly about 50% is what we sold in PPA plus NVVN.
Yes.
Or is it NVVN also you are considering as merchant?
NVVN is merchant.
NVVN is also merchant.
Okay.
We consider the merchant sale.
Okay, so 50% we are selling in PPA, and that 50% also predominantly will be in only coming from Sugen and Sugen.
Correct.
Okay, and the LNG contract that we have for 50% to be used for the PPA, there we have variable rate contracts, and what would have been that dollars per MMBtu in 1Q on an average?
The cargo which we have contracted is about $9.5. And the domestic, which is about, will be bit higher than the 9.5, I would say.
I think variable rate, what you're saying about the PPA, it would be not only imported cargoes, it will also be domestic procurement.
Correct. So for which Saurabh sir said for the imported cargo it was 9.5. For domestic he said it's little higher.
Yeah.
And we would have procured in the spot market for merchant. What would have been that dollars per MMBtu in 1Q?
So this 9.5 includes the spot cargoes also.
Okay, so the 3 cargoes that we have contracted, we are using it for both for PPA market and also to be used to sell in the merchant.
So 3 cargoes we were contracted is mainly for our long-term beneficiary.
Okay, thank you.
Thank you. Next follow-up question is from the line of Vishal Periwal from Antique Stock Broking. Please go ahead.
Yes, sir. Thanks for the follow-up. Sir, in your slide of renewable PPA contracted capacity and installed capacity, operationally, can you share, I think you did mention briefly in one of the participant answers that we are trying to tie up for the PPA. So is it the onus on us or is the agency which has called this bid, so they have to get the PPA for us?
No, it is not trying to tie up the PPA. It is PPA is yet to be signed. So we have won under the auction. PPA is yet to be signed with the beneficiary.
Okay. So I think your then remarks do mention in the same slide that SCOD will be 24 months after PPA, and there are a couple of capacities which is already contracted, and maybe difference running in, like, say, RNC, if one has to take example, difference is roughly 260 odd megawatt. So then operationally, how exactly it works? So we commission the capacity, we wait for the PPA signing up, or we only commission the 100 megawatt and then...
No. We start commissioning the project once the PPA is signed, and that's why SCOD is linked to the PPA signing rather than on the award of the tender.
Okay. No, but when we are inviting tenders, we would be, like from the equipment manufacturers, we are putting 368 megawatt complete, we'll be putting up.
Yeah.
Okay. But then the commissioning, in the sense, we are actually putting up only 100 megawatt, and then...
No. 368 is the installed capacity. PPA would be for 100 megawatts, but since these are all renewable projects and some of these contracts are with a higher CUF. So let's say in example REMCL, it is a CUF of 85%. So if I want to supply 85% power on PLF basis for this renewable project, I will need to scale up my back-end capacities, and that's why you are seeing 100 megawatts of tied up, but I am actually installing 368 megawatts to meet those tender conditions.
Okay. So it's actually, in a way, because of the higher CUF, so most of it is actually tied up. That's the right way to understand, is it?
Yeah.
Right.
Okay. Sure, yeah. That's all from my side. Thank you.
Thank you so much. Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to Mr. Saurabh Mashruwala for the closing comments.
Thank you so much, everybody. We wish everybody to stay safe and healthy. Thank you so much. Thank you.
Thank you very much, sir. On behalf of Torrent Power Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.